Well, that's a resounding yes, assuming anyone at the Fed headquarters is actually paying attention to this stuff. Now, somewhere in the middle of all that, the economic numbers I talked about with Frank hours earlier finally hit the wires. At first glance, they looked, well, disappointing. Second glance, still disappointing. But markets were rallying anyway. Fed fund futures were undulating in the corner of my screen like they were trying to send me some sort of Morse code. It was pretty clear that since last Friday's comments from New York Fed President John Williams, when he struck a noticeably dovish tone, that market sentiment had turned. Bulls were back at the party, and these soft economic numbers only added fuel to the rate cut fire. So let's talk about those numbers. Well, let's start with the ADP NER pulse. Quick reminder, it's a high-frequency look at real-time hiring using ADP's massive payroll platform. It updates well before the monthly national employment report. What you get is a 4-week moving average of hires and fires, a cleaner look at what's actually happening on the ground. Yesterday's numbers show that 13,500 jobs were cut per week over the past 4 weeks. That's downhill from last week's 7.5K job losses. And it was the third negative print in a row. Is that good for the economy? No, sir. Is that good for you if you want to see the Fed cut rates next month? Well, that's a resounding yes, assuming anyone at the Fed headquarters is actually paying attention to this stuff.